guys, I have a few things that I want to share with you today. Alright, make sure that you're able to see my chart. Alright, looks good. Alright, good. Alright, a couple of updates. I think I invited some of you here to the Trading Pub and DTI presentation. Some updates that I have for everyone is that I have a free indicator that is a news indicator, actually, that I'm giving out for free. I'm going to show you right now how it works. If you're interested in it, here is the DayTradeToWin.com website, and over here under software, you would go to free downloads, and under free downloads, we would just go to download this news indicator for NinjaTrader 7, and I'm offering this for free because I think it's of definite importance to know when these news events occur. And if you're not looking at the economic Bloomberg like I do, or the Forex Factory, there's also a bar timer for TradeStation 9. If you guys use TradeStation, you can also download that for free. So these are two free indicators that you guys can use. And the way it works, here, let me just push this out of the way, is that, let's take a look here. It can tell you, there it is, just like that. It can tell you right here in the top right hand corner what you should be looking out for, right? And so for tomorrow, I know that there's my local time at 8:15, and at 10 o'clock we're going to have some type of manufacturing reports as well as farm employment change. So if you're trading under those conditions, be aware of it. So I'm sorry, top left. Thanks, Tom. Top left hand corner. You're going to see the news events listed in red, and you can categorize this for European news events or for US news events, low priority, high priority. There's a huge amount of different options you can have with it, but this is a great thing to have. Okay. Alright, so there you have it, guys. You can download that free on the DayTradeToWin.com website. The other thing that I want to do today is I want to talk a little bit about looking at the market using price action like I do in a different way than most traders. And I'm going to show you one thing in particular that if you haven't seen my other videos, or if you really aren't up to what price action is all about, this one thing that I do can by far show you what is happening in the market in order to guide you in the right direction. Okay? So, first off, how many of you here in the room currently trade price action or just trade based off of the price and aren't using other indicators like moving averages, MACD, and stochastics? Alright, Dave? Very good. Anyone else? Dave Brown says he is. Great, just price. Very good. Alright, very good. So, in my opinion, those of you who are using price action, it's very important to understand what we're looking at and why we're doing it. Okay? I can put up a million moving averages and I can look back and find the correct parameters for anything, and it'll look great in history, but it really won't look good into the future. So my whole goal is to look at price and understand what's happening. In every charting platform, we have a ATR, average true range indicator. It's actually a tool, and it's located right here, ATR. Okay? Ninja has it, TradeStation has it, every charting platform, even Forex charting platforms have it, like MT4 and so forth. So I know that this ATR is freely available across the board. And what this average true range tells me is what is currently happening in the current conditions. And the value that I use is a value of 4. So I'm going to click this here. I'm going to show you how I use it. Exactly, Dennis. You should avoid trading during the news because it could be a chaotic event where the market can go crazy to the upside or downside, or go up and down 5-10 points before it settles. So my recommendation is, as soon as that news event comes out, stay on the sidelines, and wait until it gets back to normal, and then you can jump in. And I actually have a method of trading the news, which I have freely available as well. I have over hundreds of videos, probably 300 or 400 videos out there on the internet of me trading live, me showing you how the methods work, and I offer some free educational trading videos. One of them is how to trade the news, and so you can refer to that when you get a chance. You can just sign up on DayTradeToWin.com, you get a free newsletter and so forth, and you can learn all that good stuff. Thanks, Dennis. So what we have here is an ATR, an average true range, that tells me what the current conditions are. Now, you could look at this chart, and unless you had a reference point of the range, this could be a 5-minute chart, an hourly chart, a daily chart, right? This could be 10-point swings, or this could be 2-point swings. And so the ATR is one of the best ways to find what exactly the market is doing and how you should trade accordingly. Now I see what the current market conditions are right now. I'll go to right now. Right now we have the market at 1 point. And what this tells me is that if I was to take a trade right now, right here and right now, it doesn't matter if it's long or short, really does not matter. What it tells me is that 1 point, either up or down from this location, can be achievable. How do I put this all together? Well, are you going to require a 10-point stop on this kind of a 1 point move? No, absolutely not. On the other hand, are you going to go for a 10-point profit target as well when the market is this slow? And the answer is also no. So how I relate to this is that I want to know exactly what the current conditions are. Using price, using the last 4 bars or 4 candles, I'm using a 5-minute chart, so it would be the last 20 minutes. If you're using an hourly chart, it would be the last 4 hours and so forth. It's all relative, and it tells me what my expectations are. So if my expectations are that the market's going to rally 25 points, then I should reference the ATR to tell me if that's achievable. Or if I have too tight of a stop, let's say, let me just change here to a 1-hour chart. And based off the most recent current conditions on an hourly chart, 3 3/4 of a point on the E-mini S&P is where we're at. So now that I know this, and I can say to you, I'm not looking for a 25-point move. I'm not looking to have a 20-point stop. I have to be in line to what the current conditions are. So 3 3/4 of a point on an hourly chart is what I can achieve as a profit target. And as well as when it comes to stops, I can't have anything less than that. Because if I have a stop that's 2 points, think about this and you're going to see that it makes perfect sense. If I have a stop that is 2 points or 1 point or 3 points, one candle based off of the average of the last 4 bars could go up or down 3 points, or 3 3/4 of a point, I should say. So in reality, I have to base my decision off of what I see and what's currently happening. If I want a profit target, 3 3/4 of a point, 3.5 points, that is completely in line on what I can achieve. If I want to stop, it has to be a little bit more than 3 3/4 of a point because I don't want to get stopped out prematurely. Now, I like to make these webinars, and I try to hold webinars on a weekly or bi-monthly basis, showing you the methods live, showing you how I trade, showing you all that good stuff. If you have any questions, you don't have to wait till the end. You can go ahead and ask me the questions as I'm looking at the chat room. Some of you, this may be new to you. Others may be looking at this because you follow me and you watch all the videos that I have posted, along with all the testimonials and so forth, video testimonials. So ask away. I'll take a look at the chat. So we're always looking at the ATR, the average true range, to tell me what the current conditions are in any market and in any time frame. Let me go back to a 5-minute chart, and I'm going to show you what happened today using the methods that I teach, as well as using the ATR as an example. I'm going to put up the Atlas line here, and here, as you can see, these are the back end of the Atlas line. I can turn on or off the functions, but it does not have a parameter linked to it. So when I put up the Atlas line here, and this is for today, an entry to go short at 1379 occurred right here. Right here, 1379, the close of this candle. Now this is how I use the average true range to tell me exactly what to do next. Sure, you can have entries all the time, but you have to manage the trade accordingly. So if I enter short here at 1379, I look at my ATR, and I'm not sure if you can see that, but it says 2.07. Okay, so if it says 2.07, that means that I can achieve 2 points on this trade. I also know that I have to have a stop that's larger than 2 points so I don't get stopped out just with random up and down movement. So 1379 to 1377 is 2 points. Exactly. Right? Now, you can see what happened after that. As soon as 1377 was hit 2 points from here to here, the market turned around and went up. Now, what does this mean in the big scheme of things? If you had a 3-point profit target, you would have not gotten it. If you had a 2.5-point profit target, maybe you would have had it. But if you looked at the current market conditions at the time the order was placed, referencing the ATR, you would have hit that exactly at 2 points. You would have been in, you would have been out, and you would have been done. Questions, anyone? So, as far as looking at using a tool that's just based off of price and understanding what's currently happening, I know exactly what to do, where to get out. The entries are all taught as far as the Atlas line or power price action or at the open. They're all taught. It's objective and mechanical, but managing the trade using the ATR is essential to be in and be out. You're not going to use a 2-point stop, right? The stop is going to be based off of price. So how I use stops, those of you who are asking, the setting, Matt, is 4. The setting is 4 on the ATR, the average true range, the last 4 candles in any time frame, whether it be 15-minute, 30-minute, 60-minute. Setting is 4. Stops are very simple. I use a combination of, there's actually 4 stops that I teach. The main stop that I use is a time-based stop. I use a catastrophic stop, and I use a prove-it stop. And there's also a pivotal stop. So, for example, if you enter here this trade at 1379, I know that just basically looking at the ATR that I can't have a stop that's 2 points because up and down movement based off of the last 4 bars the range is already 2 points. So just basically moving up and down 2 points will stop me out. So I know I have to have a stop larger than 2 points in order to make the 2-point profit target. My prove it stop is going to be a close above the Atlas line. So that's my prove it stop. My time-based stop is going to be 4 to 5 bars. If I can't make the profit target within 4 to 5 bars, I'm out of the trade. And I also have a catastrophic stop that is based off of looking at the ATR and doubling the ATR for my catastrophic stop. Whichever stop gets hit first, I'm out of the trade. Raj, 2 points is not the same as 20 pips. Pips usually refers to Forex. On the E-mini S&P, 4 ticks is equal to 1 point. So it would actually be 8 ticks based off of point value. 8 ticks is 2 points. Okay, Matt, any instrument? Let me just take a look here at the. Make sure I got all your questions here. Hold on a second here. All right. So let me see if I lost any. PJ. Okay. Examples of entries, exits, and stop loss. Example of an entry. Example of an exit. A stop loss would be the 3 stops I mentioned. Time-based stop, catastrophic stop, as well as a prove it stop. Prove it stop is a close above the Atlas line. Catastrophic stop, you double the ATR. Time-based stop is based off of 4 to 5 bars of time, or 4 to 5 bars if you're looking at a 30-minute or 15-minute or 60-minute. 4 to 5 bars. If you haven't reached that profit target by that time, now we're on hope. We're hoping that this is going to go in our favor. We're out of the trade. So PJ, you asked that 4 times. I answered it accordingly. ATR setting on Forex is also 4, Matt. All right. PJ says, what's the cue for taking the position? You mean, how do I know that's 1379 to enter, PJ? Is that the question? Why 1379? I'm going to surprise you because I actually am going to show you how this works. The entries are 2 consecutive closes. 1, 2. The closing price corresponds to my entry 1379. So if you're looking at the cue on why I'm taking a position, 2 consecutive closes above or below the Atlas line will provide me the cue, as you say it, to get me short or long. All right. Now, if somebody has a mic on, maybe a last presenter, I'd appreciate it if you can turn it off or mute it. Let me show you yesterday. Okay? Because a method, any method that is working, needs to be shown consecutively. So consecutively, we have yesterday, 1, 2. My entry is 1381. No surprise, that's the entry to go long, 1381. Now I'm going to ask you guys, based on what I've just taught you, using the ATR, what's my profit target on this here? Right? Take a look here. What can I expect out of the market? Just basically looking at this, not knowing the future. Anybody see that? It's 1.75. So I can expect from my entry 1381 about 1 3/4 to 2 points of profit. Right away on the next bar, I got it. All right. My setting on the mat for FX is 4. ATR and crude light is still 4. Javier. Joe, the second bar after your entry, wouldn't that have stopped you out? What are you talking about? This is an entry, 1381. Here is the profit target. if you look at the following entry, 1379.25, there's the profit target based off of 2 points, 1 3/4 of a point. There's no stop there. Today, go to today here. 1, 2. Here's my entry. Right? There's my profit. My ATR is 2, so I have a 4-point stop, catastrophic stop. 83 is my stop. There's my 2-point profit. All right? Joe? Gary? Mike? What about the outside bar 2 bars later with a 2-point stop? You're out. We're not using a 2-point stop. We're using the ATR as a profit target. We're doubling it for our stop as a catastrophic stop. But the catastrophic stop is not the only stop, guys. We're also using a prove it stop and a time-based stop. So there's 3 stops total that we're using, whichever gets hit first. Okay, guys? Setting for the ATR is 4, okay? You got it. Tom, the stop is not 1-to-1. The profit target is 1 for the ATR profit target, but the catastrophic stop is 2-to-1. The time-based stop is 4 bars later, and a prove it stop is a close above. So really, it's dynamic. It's whatever's happening. That's today. This is yesterday. A short, as well as a long, right here, 1383.75. I'm sorry, 1381. That's 2 days in a row. Let me show you 3 days in a row. Let me go back. 1346.50 is my entry here. 1, 2 to go long. Now, if you may be wondering what all these S's and P's are, these are strength trades, strength trades, strength trades. Just telling you that there's, and the software provides this, and I also show you how to do it manually too, to calculate the strength trades and the pullback trades and so forth. So it's really objective when you look at it. There's really no fluff here. 1, 2, and you're long. Closing price of the second candle is my long entry. All right. All right. Something else I want to discuss today, besides just the Atlas line and the ATR, let's talk a little bit about price action. And we'll go to today. The first thing that I want to tell you is that it's not worth trading when it's too slow, and it's not worth trading when it's too volatile. Since I have a few minutes left, what I do is I take a look at the ATR, and anything under 1 here, which is 4 ticks on any market, euro and so forth, it's not worth trading. So if I'm ever interested in taking a position when the market is that slow, it's not worth it. Just too slow. Anything under 4 ticks, leave it alone. Anything over 20 ticks, which would be 5 points on the E-mini, and probably on the currencies you can go to 25, 30 ticks, it becomes more of a volatile move. So on the E-mini, anything under 1 point, leave it alone. Anything over 5 points, leave it alone. Too chaotic. This is how I manage looking at when it's too slow to trade. Now, you may all not be U.S. traders. You may be internationally, Australia, Germany, England. So why not take advantage of when the London Open starts trading, when the Life Exchange opens. Locally, it's 8 o'clock London time. For me, it's 3 o'clock in the morning. I'm here in Florida, Eastern Standard Time. You may want to trade. So why not take a look at opportunities that occur pre-market or overnight? So if you take a look at what happens overnight, we have here at 3 o'clock for me, the London Open occurs right here, right over here. Now, how do I know that this is an optimal time to trade? Well, take a look at the ATR. This is 3 o'clock in the morning, London Open. Look at that ATR. It went from being dead here, right, less than 4 ticks, to waking up and showing you some opportunity here. So what would be an example of an entry to trade during the London Open? Well, I'm going to refer back to the Atlas line here. And I can start it off the Atlas line at 9:30 when the US Open begins. But I can also place a second Atlas line at 3 o'clock in the morning for when the London Open occurs. So now I have here a London Open, 1381.50, closing price of my second consecutive close. I look down, about a point is what I can achieve out of it. No problem with that. You have here the short, you have here a long, you have here a short here. As long as it makes sense to trade. Anything under 4 ticks is dead. So this here, even though it worked out, I would say to you, it's not worth trading. Okay? So this is the average true range as well as the Atlas line for overnight. And here is the US Open Atlas line trade. So the latest trade that occurred here was a short, right over here, 1381, right there, to go short, right before noon today, Eastern Standard. All right. If you want to see what the overnight did in yesterday, or last night's overnight, I should say, here it is. We have double bar short, right over here, 1, 2, to go short, right here, based off the ATR, looking at not more than a point, hovering right on a point. You have a trade here, 1378, right over here, closing candle, 1, 2. This trade didn't work, prove it stop, you exit the trade. Follow up with another short, 1377.5, because we have 1, 2 consecutive closings. I'm short, and within 4 bars, I'm out of the trade with that point profit. All right. Now I'm going to remove all these things here off the chart. I'm going to go back to a nice, very nice, clean chart. And the previous presenter mentioned something about market manipulation, and I agree. Markets are all completely manipulated, all of them. How do I know that? Well, at certain times and at certain values, price completely does 180. And it'll come out of nowhere. So now I'm going to give you an example. Why did price, when it came to this area here, turn around? It's pretty interesting, right? It was going up and up and up, and all of a sudden it reversed. Well, I can tell you that I know exactly why that happened, and I knew that was going to occur before it happened. And with 5 seconds left, what I'm going to tell you is that if you look at what happens here at 1385, you're going to see that the market, when it hits 1385, bounces off of it. Actually, it is 1 o'clock already. Oh, that was quick. Before I let you go, I didn't realize it was half an hour already. That was quick, very quick. Usually my webinars are hour, 2 hour long. Okay. 10 off DTW coupon code. If you'd like to purchase anything on the DayTradeToWin website, a little incentive to get you going. 10 off DTW is the coupon code that you're going to use, whether it be a 6-month license, lifetime license, power price action. And don't forget to download the free indicator that you see here for NinjaTrader. Tells you what to expect, either Bernanke's talking or PPI or FOMC. It'll alert you and it'll help you out. All right, thank you, Trading Pub and DTI. If you have any questions, please visit DayTradeToWin.com, and I'll talk to you soon. You can always call me. Have a great day.